Valdez feeling strong like bull. So is the market. Here to help us figure it all out, the investment pros. We've got Matt McCall and Jim Frischling are back, and Hillary Kramer, of course. Plus, Jim, you're a yelling whisperer, if you will. Okay, yes. For some reason, you know what Janet is selling better than anybody else. And by the way, I think she's deliberately now going into that green speak thing. She kind of told us, listen, I'm not holding Wall Street's hand, so don't look for me for any signals. Jim, help us out.
Yeah, she's dovish and she's hawkish, so she's taking both positions. But the last time I spoke to her, I didn't speak to her. But no, she really is talking about warranted this year, but data dependent, and the data really is somewhat underperforming. I'm also going to do former Fed Chair Bernanke whisper speak. He's talking about this is the new normal. Low rates, this is not an aberration. This is here to stay. So I'm sorry, to Alan's point, if you like the way markets are performing now in this current backdrop of monetary policy, expect it to stay, because even a rate move is going to be benign. We're in a low rate environment, and it's going to give a boost to corporates.
Data dependent, real quick, Jim, data dependent, what data?
Look, we're going to twofold.
What's the most important thing? Is it jobs? Is it wages? Is it housing?
This week it's jobs, and then it's going to be the absolute number, and then we're going to quickly start looking at the wages. Those are to me the two most important things. It starts with more people getting employed, and even if wages aren't going up as much as we'd like to see, the fact is they are going up. Matt's been pointing this out. The buildup is starting to go.
Sure. Then you say, well, because then it leads to CapEx spending, so it made that knock down some of the material stocks along with it. So Wall Street can always put a spin on something to make it look good, and that's what they're doing.
Forget no spin on this. There are merger talk. Mergers are happening. Companies are buying each other right now. They're believing the stocks have value. They might be using their high stock as a premium to get it done. But the fact is, the mergers are showing you that they're bullish on their own sector.
Actually, that's a great point. And I talked about that coming into the year. I thought that would be a catalyst. And here's the thing. Most of these deals are being done with cash.
Yeah.
Jim, I know more and more people stopping you on the street to ask you about the market. How do you explain this to them?
Well, one of the things I would ask, and I think the point of that email was, why does the price even matter? Or let me rephrase that. The price alone is not the only indication you should be looking at. How many shares are outstanding? What's the market value of this company? What is the earnings per share of this company? What's the dividend? There are so many other factors. The price alone, to me, is an incomplete story.
Right.
It might be the starting point, but then where do you go from there?
Right.
So don't make your decision based solely on the price of a stock, meaning, again, there's the absolute price, because there are many other factors that contribute to the value of this company.
I agree, guys. I agree. I think the notion of value has nothing to do with the price per se, and a $200 stock could actually be undervalued. Alcoa?
Yeah, I think people think about them as their dad's stock. The old Alcoa, the new CEO, there's some acquisitions going on. They're changing their internal strategy. I actually think they're going to do a lot more than just be the aluminum player. But again, they have to change their image.
We're looking at a very, very ugly chart, though. I mean, you're not in this stock.
I'm not in this stock. I'm just saying, I think there are better days ahead, but no, I'm not in it.
You know, all right, so we got a guy here who's actually in the business. Jim, beef prices, they keep going up and keep going up. Starting to get to a point maybe where they start to crimp some of these restaurant margins, or can they pass them on?
No, there are absolute limitations to how they can pass them on. In fact, for most steakhouses, especially the upper end of the steakhouses, that sirloin, that porterhouse, for the restaurant, that's one of the worst dishes they have. And by worst, I mean they have the lowest margin on those dishes. They'll make a lot more money on the pasta, the salads, obviously the liquor, the sides. But to actually keep up and to put out a great piece of meat, they got to start spending a lot of money. In fact, a lot of restaurants, I assume, are going to start limiting their menu a little bit. They might go to more of the commodity beef and not the uber momentum type beef, maybe some portion control. But again, if you're going to be a big steakhouse, you got to put out the quality meat. You have to make your money elsewhere and accept a low margin on that steak dish.
That's the problem.
All right, Jim, I mean, you know this industry. You know it as a proprietor and
I like Buffalo. I like Chipotle, like Panera. So I'm going to now put myself in a crazy camp. You know, everyone's beating up McDonald's, and despite all the headaches, they're not down that much, and they're continue to open stores and diversify their menu. And I'm telling you, they can pass. They don't play at the high end, obviously, but they can pass cost through, or in fact, they can compete on price. So I watch these guys have a better turnaround going forward.
I like McDonald's too. I think anyone willing to hold it for at least a year is going to be pleasantly surprised. This world has jumped all over this thing, and they are putting the kind of pressure on the state I haven't seen in a long time. This is instant pressure. I think Mike Pence is going to blink personally.
I think he's probably going to blink, and I think the leaders probably could have gotten together with the business community beforehand, but now they're seeing the wrath and they're seeing the reaction to it. I kind of think it's like two dogs are fighting. They're going to have to sort this thing out, and right now I think for the benefit of Indianapolis, they're going to have to move on this one. People were concerned about Chevron in 2008, also about free cash flow, and they raised their dividend that year by 12%, so they'll get it done. We also complain about companies not investing. These guys are actually more committed to CapEx than almost anyone else in the space, and also as long as oil stays low, they will take more market share. So again, I really do believe this is one of the power players. Might be some down downside, certainly, given that oil is under a lot of pressure. But I think going forward, this is one of the companies to own.
How do you ride that out, though, Jim?
I mean, look, you were talking about a major event and what's the big catalyst. And obviously, I can't predict the next black swan, but I look at how well the market has held despite, for example, the pressure on oil and the jobs that's caused. So I do think the market is demonstrating it's going to hold in there. People keep talking about the Fed, and I'm telling you now, ignore it as much as possible. But the fact is, I think if you've liked what the market has done, even if you haven't been in it, if you've seen a good performance the last few years and you can't argue with that, I really think it's unchanged. You have to be selective. You have to start making sure you know your companies, watch for more consolidation, maybe add some dividend payers to make up.